Picture this. It's a Sunday night. You've finally opened your tax return, and you're about to type in your bank interest from memory. Here's the thing. The ATO probably already knows that number to the dollar. Your bank reports it to them every single year, and if you leave off even $1,000 of interest, you can be auto-flagged years later with penalties of up to 75% on top of the tax you owe. ATO penalty regime. Stay with me, because there's a simple way to get ahead of this. If you've never thought about this before, that's not a failure on your part. Most people are never told how much the ATO actually sees. But here's what's really happening. If you've got a bank account, an employer, an investment, or a side hustle, your data is already flowing in. The ATO now runs over 600 million third-party transactions through more than 60 data matching programs. PABS Accounting 2026. The good news, you have 3 simple moves to stay ahead of it, and I'll walk you through every one. Here's the number that should make you sit up. 600 million plus financial transactions ingested every year. ATO, cross-checked through more than 60 data matching programs. PABS Accounting 2026. But here's the part most people miss. The ATO isn't just collecting all this, it's quietly reconstructing large parts of your return before you've even logged in to lodge it, which completely changes how you should approach tax time. So here's your game plan. 3 moves to stay ahead of the match. 1. Reconcile your ATO pre-fill. 2. Match your side hustle turnover. 3. Pull your multi-year capital gains. Each one takes under 20 minutes. They're all completely free, and I'll show you exactly how to do each. Let's start with how the ATO actually rebuilds your return. So how does the ATO put your return together before you do? Through compulsory feeds from at least 14 categories of source. Your bank reports your interest and any big international transfers. Your employer reports your salary, allowances and bonuses every pay cycle through single-touch payroll. Services Australia reports your Centrelink payments. Share registries report dividends and trades going back to 1985. Add your managed funds, your super, and every PEXA property settlement, all of it matched to your tax file number. ATO, Tax Tank 2026. Now, here's what happens if your numbers don't line up. The system flags the discrepancy automatically. No human needed. If the ATO sees the omission as careless, that's a 25% penalty on the shortfall. Reckless behavior climbs to 50%, and for intentional disregard, up to 75% of the tax avoided, on top of the tax itself. ATO penalty regime. And the general interest charge compounds on that every single day, so the real risk isn't the original mistake, it's how fast it grows. But here's where it gets genuinely interesting, and it's the part most people never see coming. The ATO isn't only hunting for missing lines anymore, it's looking for patterns that don't add up. Declare a modest income but hold several high-value insurance policies? That gets noticed. Your Stripe and PayPal sales dwarf the business income you declared? Noticed. Cash rent that's lower than what your agent reports? Noticed. Even your travel claims can be checked against border movement records. Tax Tank 2026. It's joined up in a way most of us underestimate. And here's the part that really matters. These small gaps compound. Say you underreport just $5,000 a year for 5 years. The ATO can reconstruct $25,000 of undisclosed income. Tax Tank 2026. At a 32.5% marginal rate, that's about $8,100 in tax. ATO. Add a 50% reckless penalty and you're over $12,000 before daily interest even starts. A few small estimates left unchecked turn into a number that genuinely hurts. Now, I want to gently challenge a belief that catches a lot of good people out. The myth is, my side income is too small for the ATO to bother with. The assumption is that they only see your salary and whatever you choose to declare. Here's the reality. eBay, Shopify, PayPal, Stripe, Square, and Tyro already report your gross sales straight to the ATO. Nanak Accountants 2026. If this is you, it's not because you weren't paying attention. Most people simply aren't told. The fix is wonderfully simple. Match your declared income to your platform totals. Let me put the whole picture together because the numbers are sobering. Underreport $5,000 a year for 5 years and you're sitting on $25,000 of hidden income. Tax Tank 2026. Roughly $12,000 in tax and reckless penalties combined. ATO. And here's the catch I have to be honest about. Once you're flagged on 1 year, Every older year still inside the amendment period gets pulled back open too. It's rarely just one return, which is exactly why getting ahead of it matters so much. Let me show you how this plays out for a real person. Meet Tony. He's 37, an IT contractor on an ABN with a side gig flipping electronics on eBay. He grosses around $145,000 a year, $115,000 from contracting, about $30,000 net from online sales. He's GST registered, holds crypto on 2 exchanges, and like a lot of people, he assumes the ATO only sees his PAYG income and whatever he chooses to disclose. Here's what the data actually showed. Discovery 1. $75,000. That's the gross sales his payment and e-commerce platforms reported to the ATO last year. Nanak Accountants 2026. Tony only declared $40,000, figuring the rest was just personal items he'd flipped. That $35,000 gap at 32.5% is about $11,300 in extra tax, and if it's judged reckless, a 50% penalty pushes it past $17,000 ATO. And that's just the first of 3. Discovery 2. Tony's crypto history goes back more than 10 years. The ATO's crypto asset data matching program holds transaction records from Australian exchanges all the way back to the 2014-15 financial year, tax tank 2026. Tony genuinely thought his trading was private, but if he's averaged just $2,000 of net undeclared gains a year for 5 years, that's $10,000 the ATO can identify, roughly $3,250 in extra tax plus penalties and interest on top. Discovery 3, and this is the most damaging. Tony declares $80,000 to $90,000 in taxable income, but he's just bought a $1.1 million investment property and holds high-value income protection cover. Every property settlement generates a PEXA record that goes straight to the ATO, tax tank 2026. His agent reports $40,000 in rent, he declared $25,000. That $15,000 gap is nearly $5,000 in tax, and if it's seen as intentional, over $8,500 all in. The picture is starting to add up fast. Add it all up. Across his e-commerce, crypto, and rental gaps, Tony's modeled bill comes to about $52,800, roughly $42,000 in back tax and $10,500 in 25% penalties before any interest, ATO, tax tank 2026. And here's the honest part, if any of it's judged reckless or intentional, with penalties climbing towards 75%, the total can blow past $70,000 or $80,000, none of which Tony saw coming. The good news is you can avoid all of it. So could this be you? Here are 3 quick signs you might be exposed. 1. You've never actually downloaded your ATO pre-fill report before you lodge. 2. You couldn't tell me your total platform turnover for the year off the top of your head. And 3. You haven't tracked your crypto or share disposals across multiple years. If even one of those rings true, don't worry. The next 3 moves are exactly what you need, and they're genuinely straightforward. So where does this leave you? You don't need to overhaul your whole financial life. You just need a few specific, practical steps you can start today. 3 moves, all free, all under 20 minutes each. Let's do them together, starting with the most important one. Move 1. Download and reconcile your pre-fill before you lodge. Go to MyGov, into ATO Online Services, then Income Tax, and open the pre-fill report. It shows you exactly what the ATO already holds against your tax file number, your bank interest, employer income, dividends, government payments, private health. This is general information, not personal tax advice. But here's the part most people get backwards. You adjust your figures to match theirs, not the other way around. Here's exactly how. Log into MyGov and link the ATO service if you haven't already. Open your latest year and hit Pre-fill My Return. Then compare every amount against your own records and adjust your figures to match what the ATO holds. What does good look like? Your income items equal or exceed every pre-filled amount with any genuine difference documented so you can explain it. Move 2. Cross-check your business and side hustle turnover against what the platforms report. Export your gross sales from every platform you use. eBay, Shopify, PayPal, Stripe, Square, Tyro. Here's the key thing. These dashboards mirror the exact merchant data the ATO already receives. Nanak Accountants 2026, so your declared income has to reconcile against them. This is the single fastest way to spot a gap before the ATO does. Here's how to do it. Export your full year gross sales from each platform, add them all up in your accounting software or even a simple spreadsheet. Then compare that total to the business income you reported. And document any genuine personal item exclusions with evidence to back them. What does good look like? Your declared income is at least as high as your total platform sales, with a material gap of 0. Move 3. Pull your multi-year capital gains footprint, both shares and crypto. Download your annual transaction and dividend summaries from each broker or share registry, and the full trade history from each crypto exchange. Remember, the ATO's data goes back to 1985 for shares, and 2014 or 2015 for domestic crypto. Tax Tank 2026. So a clean, complete multi-year picture isn't just tidy, it's your protection. Here's exactly how. Export at least 5 years of trades from your brokers and exchanges. Calculate your gains and losses year by year in tax software, matching each disposal to its acquisition. Then compare that to what you actually reported. And if you find gaps, get advice on voluntary disclosure first before you do anything else. What does good look like? Your reported gains match the registry and exchange data, with no missing disposals. And why does all of this matter right now, this year? Because the net keeps tightening. Back in 2022, Single Touch Payroll Phase 2 started pre-filling your detailed salary, allowances, and bonuses every single pay cycle. By 2024, crypto exchange records were being matched back to 2014-15, and from 2026, the OECD's Crypto Asset Reporting Framework, CARF goes live, with offshore crypto and foreign account data flowing straight to the ATO. Tax Tank 2026. The window for guessing is closing, which is why doing this now puts you genuinely ahead. Once you've done the 3 moves, here's how to verify you've got it right. You should see your return match every pre-filled income line. Confirm your declared sales or at least your platform totals. And if you've uncovered some old gaps along the way, ask a registered tax agent about a voluntary disclosure. Because doing it before the ATO finds it almost always means lower penalties. Getting in first genuinely works in your favor. Everything I've shown you here comes straight from the ATO and specialist accounting analysis. And I've linked all the sources below so you can check every figure for yourself. I genuinely encourage you to have a read. So if you've made it this far, you now understand something most people lodging in Australia simply don't: how the ATO matches 600 million records to your return, and the 3 moves that protect you. Your next step: download that pre-fill report tonight. It takes about 10 minutes. And if you want to go deeper, next I'll show you the legal way to disclose old crypto gains before the data match finds them. I'm Sophie, I'll see you there. If this helped clear things up for you, the best thing you can do is take that first move today before you lodge. Your future self will thank you. I'm Sophie, and I'll see you in the next one.